Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, it's the 30th of June. My name is Russell Shaw. I'm a senior market specialist at FXCM. If you'd like to contact me, my email address is rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers. We'll start off with a high-risk investment warning. Okay, and here's our commentaries disclaimer. Thank you. Excuse me. Thank you very much. And here is our references: MarketScope 2.0 and TradingView.com. And what we'll do is we'll take a look at TradingView first. I want to show you this is the US 2-year yield, and underneath that's the US dollar. And what happened yesterday is we had some really strong economic data coming out of the US. We had final GDP coming in at 2%, and that was much higher than the expected 1.4%. We also had unemployment claims coming in lower than expected, came in at 239,000 versus 264,000, and as a result, yields pushed higher. So you can see here's the yields pushing higher, and the dollar has been moving strongly over the last few days. I think that it's interesting just to keep an eye on the correlation between the 2-year yield and the US dollar itself. By and large, it has been positively correlated, but there has a divergence has emerged. So you can see that the US 2-year yield is moving in that northeasterly direction, and the US dollar is actually moving in a southeasterly direction. And what we've been saying is, well, one would think that the correlation reattaches, and the way that the correlation is going to reattach is, well, one of two things has to happen. Either the US dollar has to move up in line with the 2-year yield, or the 2-year yield has to move down in line with the US dollar. And it does look as if it's the greenback that has started to make the move. It looks like it's starting to move upwards. And the way that we can track that is doing our top-down analysis on the US dollar. Now that there is strong data that is starting to effectively print, let's keep an eye on the weekly chart. We know that the US dollar is moving in a sideways pattern. Yesterday I said I wanted to look at the 30-week exponential moving average. I think now's the time that we should bring it in. So just going to go ahead and bring in the 30-week exponential moving average. And what we'll do here is we'll just make this 30. I'm going to make the line color black, just so it's easier to see, and we'll make it slightly wider. And what you can see is that here is the sideways symmetrical triangle, right? And as we're moving in that sideways symmetrical triangle, the US dollar is cutting, it's oscillating around that 30-week moving average. And that makes sense because the moving average is a trend following indicator. So there's no trend. So the trend following indicator is not working. It's creating a lot of whipsaws. But what's interesting now is that we do have the US dollar above the 30-week moving average. And we have to see now, is this another whipsaw in the series, or does the US dollar start moving up and the 30-week moving average start tracking up with price? So if it starts tracking up with price, then we move from a consolidation into a markup phase, and that will be interesting. So what we're doing is we're looking to see if we move into a markup phase. And there are a number of other analytical tools that we can use. We've got a reference candle over here. That looks like it's about to complete. What's a reference candle? it is at least a 3-candle cluster that's got the lowest low. So here's the candle that's got the lowest low. This is actually in 4 candles, 1, 2, 3, and here's the 4th candle. We're looking to see price move above the reference candle's high, and we're looking to see price close above the reference candle's high. So here is what looks like it's going to be a completed reference candle. Why is that so important? Because all swings start with a reference candle. If you're showing me a swing, I'll be able to identify the reference candle. The problem is not all reference candles lead into a swing. So here's a reference candle over here, but it didn't really lead into a swing. Okay, here's a reference candle here. It just doesn't really lead into a swing. So we want to see if we get the swing that develops off of this reference candle. Now, the RSI popping above 50, if we get it holding above 50, and we get the US dollar moving up, trailing the exponential moving average behind it, well, that would give me more confirmation that something is happening with the US dollar. And again, what's the fundamentals behind that? Effectively, US dollar playing catch up with yields, okay, because they decoupled since the end of May, and we want to see if they're reattaching themselves. So it's going to be an interesting exercise. If we go down to the daily chart here, you can see that the dollar's moved into zone 1, which is in the upper blue, upper red, okay, so that's the bullish area. And you can see that the RSI on the daily is above 50 and holding. But if we're going to get a movement up, it has to take place in zone 1. So we've moved into zone 1. What we did do is we did identify the reference candle on the daily. Here's the reference candle, right? That's the candle with the lowest low. And then we identified the completion. Now we want to see if there's going to be a swing on that daily chart. And if there's a swing on the daily chart, there is effectively higher greenback prices. What's happening? It's reconnecting with 2-year yield. What's happening with 2-year yield? 2-year yield's moving up because of the hawkish bias of the Fed monetary policy. What's driving that? Well, final GDP came in much higher than anticipated. Unemployment claims came in much lower than anticipated. Day before, we saw some core durable goods coming in above expectations. So the numbers that are printing certainly are on the bullish side, hawkish side. Let's go down to the hourly chart and see what's happening with the US dollar hourly. And okay, take a look. Here's we put in the potential movement yesterday. It happened. Okay. What we can look at now is the central pivot S1. Okay, so we want to see, is the central pivot going to hold? There does look like there's a fair amount of support here. Okay, and it does look like there's a fair amount of support at the S1 level. So the central pivot S1 seems to be a block of support. Let's see if that does come in and support dollar prices. If it does come in and support dollar prices, then of course the short-term traders aligning themselves with the longer-term dollar players. Okay, so we're moving right into a thick band of support. What we want to see is if the EMA turns up, it moves in that northeasterly direction. We want to see if the stochastic moves up, crosses up and moves in that northeasterly direction. And again, if it does the stochastic move into the upper quintile and hold? Because if it moves into that upper quintile and hold, then we have an underlying bullish momentum that is supporting greenback prices. So if the dollar has moved into zone 1 on the daily, let's just take a look at euro, see what's happening on the euro side of things. All right, and what's happened with the euro? It actually is showing some signs of weakness. We, instead of seeing, let's just instead of seeing a bullish reference candle, so we put the arrow here, and then we had condition 2. This candle did take out the reference candle's high, but it never closed above it. So we didn't get the 3-point confirmation. But we've got a 3-point confirmation to the downside. Let's take a look at this. So what we can do is we can put in the reference candle over here. So if we're looking at a bearish reference candle, we're looking at a candle with the highest high in at least 3 candles. Here we've got, again, it's 4 candles, 1, 2, 3, and this is the 4th. Condition 1, highest high. Condition 2, price moving below the reference candle's low. Condition 3, yesterday, price closing below the reference candle's low. And that's pushed effectively the euro from zone 1 into zone 2. So relative weakness coming in on the euro side of things. So whilst it looks as if there was some strength coming in on the US dollar side, no surprise to see that there's some sort of weakness coming in from the euro side of things. And the RSI starting to push below 50. Let's take a look at the hourly and see what's happening on the hourly chart. Okay, so what you've got here is the hourly chart looking potentially to cross. It's already crossed, so let me rephrase that. Looking to develop angle and separation. So we had the angle and separation here. It tightened, and now it looks like we're about to get some more angle and separation. In other words, 1, 2, 2, 3, and possibly moving into the next 1, 2, right? So we want to keep an eye on that. Effectively, the stochastic here is in a very weak area of the stochastic. It's in the lower quintile. If it goes back below 20 and holds, then it's quite likely that we see further bearish pressure on euro US dollar. So seeing that bullishness on the dollar, seeing that bearishness on the euro US dollar, and we want to just see if we get that angle and separation on the euro US dollar, and we want to see if we get the stochastic making its way down to the lower quintile. Let's take a look at cable now, see what's happening on the pound US dollar. Okay, just give me a moment here. The system's just, here we go. Okay. Right. So what we can see is a movement from zone 1, the bullish area, into the neutral area. Well, going from zone 1 to zone 2, that's relative weakness. We do have a bearish reference candle here as well. Let's put it in. And remember, the reference candles must be present at swings. They don't necessarily lead into swings, but they must be present at swings. So the fact that we've got one here, well, there's a potential swing on. Here is the candle with the highest high. Here is condition 2, 3, price going below the reference candle's low and closing below the reference candle's low. And then the stochastic, I beg your pardon, the RSI, dipping below 50. If it holds below 50, then there's going to be an underlying bearish momentum that could push pound US dollar down further. Let's take a look at the hourly chart and see what's happening in terms of the short-term signals. And here you can see the resistance is on the central pivot, and I would suggest there is a resistance area on R1. So just like we saw the thick band of support for the US dollar, it looks like there's a thick band of resistance between central pivot and R1. And the question now is, does it manifest into a impulse move to the downside. Well, for that to happen, we need to see the EMAs cross to the downside. We need to see the stochastic cross to the downside, and we need to see the stochastic make its way down to the 20 minus areas and hold. So again, it's a dual type of analysis. We're starting with the US dollar, seeing what the US dollar bias is, and then moving to euro US dollar, then moving to pound US dollar. Another one I want to take a look at, I want to take a look at another two charts. I want to take a look at gold, and then I want to take a look at DAX. So let's just bring up gold and see what's happening with the precious metal. Okay, just give a moment for the gold chart to, okay. Now, what you can see here is gold is surfing zone 3. Zone 3 is between the lower blue, lower red. Typically, gold moves in an inverse relationship to the US dollar. What's interesting, take a look at the 2-year yield versus gold. Let's just bring that up. And whereas there was a decoupling between the US dollar and the 2-year yield, the relationship between gold and the 2-year is interesting. I'm just going to bring up gold here. Okay, so as we've moved in this northeast direction on the 2-year yield, so we've moved southeast with gold. So gold moving in a opposite direction to yields. If the yields carry on pushing up because of that strong data that we saw yesterday, then, well, what does it say about gold? It suggests to me that gold may face further pressure. So we can see that it's in zone 3. We can see that it is under the 50. So there does seem to be some sort of bearish momentum. Go through to the hourly chart here. And effectively, what's going to be interesting here is if we get a bearish cross with the EMAs and that develops angle and separation. We've already got a bearish cross in terms of the stochastic. Well, what happens if the stochastic then drops to the lower quintile and holds? That would suggest to me that gold comes under pressure. And if gold's coming under pressure, I'd go back to US dollar and see if US dollar is being supported to the upside. Let's just have a quick look at US dollar before we move on to DAX. All right, so just a reminder, take a look at that central pivot, take a look at that S1 pivot. That's where the block of support is. Okay, let's go to DAX, see what's happening on the DAX. Okay, so we have pointed out that the DAX has lost a lot of momentum over the last few weeks. It's moving sideways. It is above the 30-week moving average. Its RSI is above 50, and I just wonder if we get a higher trough here. So we'll just keep an eye on that. At the moment, we are in the middle of no man's land. So the DAX is trading in neutral. Okay, it has moved from zone 3 into zone 2, so perhaps a little bit of relative strength coming in. However, if there is a dollar bid, I wonder if that exerts some pressure on DAX. So just be careful about that. It does look as if the DAX is running with a bid at the moment. We've got just less than a minute. We'll get the cash market open, but you do have a positive cross here. You do have a positive cross on the stochastic. If the stochastic pushes through to the upper quintile and holds, we may see DAX pushing higher on the day. Just see the resistance here at R1. So we'll need to just get above that resistance at R1, and the stochastic would need to hold above 80. Then we potentially got a swing on for today. All right, that's as far as we're going to go today. I want to thank everyone for joining me this morning. If there's any questions, go ahead and type those in. I'll just wait a few seconds, see if there's any questions. All right, nothing coming in. So what we'll do is we'll wind up here. I want to wish everyone a good weekend ahead. We'll chat Monday morning. Thanks very much, guys.